Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is Friday. It is approximately 5:30 p.m. It is April the 29th, so April is in the books. Basically, April is finished. Lots of people probably took some profit. I guess a few people might have even exited some positions because they're running scared. But I don't really want to talk about the market and the past week because it's been crashing. Maybe we can do that another time. What I do want to do is I want to talk a little bit about Occidental specifically, and with the earnings coming up in just a few days now, because it's just sort of 10 days away. Let's take a quick look at Occidental and see what the smart people are saying that we can expect for the quarter that they are going to report in about 10 days from today. So Occidental Equity Researchers at Capital One cut their Q1 2022 earnings estimates for Occidental Petroleum in a research note issued to investors on Monday, April the 25th. So that was Monday this past week. Capital One financial analyst Robert Tullis now expects that the oil and gas producer will earn $1.87 per share for the quarter, down from his previous estimate of $2.08. Well, this might seem like he cut his earnings per share target or estimate, but I think $1.87 is actually more realistic than his previous number of $2.08. Capital One Financial also issued estimates for Occidental Petroleum's Q4 2022 earnings at $1.78. That's earnings per share, obviously, for the fiscal year 2022. And then earnings for that fiscal year, $7.14. And then fiscal year 2023 earnings at $5.99. Now that's kind of looking ahead far in the future. Let's focus more on the quarter that's about to be reported, and we'll look more closely at that. Oxy last released earnings on Thursday, February the 24th. Oxy reported $1.48 earnings per share for that quarter, topping the Thomson Reuters estimate of $1.08 by 40 cents. It was a nice beat. Occidental also had a return on equity of 31% and a net margin of almost 9%. The firm had revenue of almost $8 billion during the quarter, compared to analyst expectations of $7.3 billion. Now, if we pause here for a second, we say like, okay, you know what? This was Q4 2021, where we had an average price on WTI sort of in the mid-80s for the quarter. For Q1 of 2022, we have had an average price of WTI in a range of about $100. So I don't want to extrapolate that as an obvious potential to beat, because you can beat on revenue and on earnings, theoretically speaking. But if your operational costs and capex has gone up quite significantly because of inflationary pressures, which includes people, steel, sand, etc., then it can put a squeeze on that margin for you, especially as it relates to your earnings per share. During the same previous period in the previous year, the firm had posted 78 cents negative earnings per share. Now, of course, the last quarter earnings per share of $1.48 easily beat the previous year, but the previous year was 2020, which was the year of the sort of start of the pandemic. So quite a significant change. Oxy's revenue for the quarter was up 136% on a year-over-year basis. This was Q4 to the previous Q4. Let's see what the analysts are saying. Susquehanna upped their price from $58 to $71 in a research note issued on Monday. That was Monday this past week, April the 25th. Raymond James upped their price from 85 to 90 and gave the stock a strong buy rating in a research report also on Monday this past week. Morgan Stanley moved their price objective from 52 to 70 and gave the stock an equal weight rating in a research report that previous week, April 22nd. The street raised the C rating that they had on the stock to B-, which is an upgrade, but they didn't really go into the price sort of for the shares in terms of what they expect where it's going to go. Based on data from Market Beat, this is an average. Oxy presently has a consensus rating of buy and a consensus price target of $61.42, which in my mind seems quite realistic and reasonable. Oxy opened at $55.59 on Thursday. That was yesterday. Of course, today we saw a nice pullback again. So for some people, that would be a buying opportunity. So forgive me for saying nice, because pullbacks are never nice because they don't feel nice. But you know, if you're looking to get into a stock, the price of $55, $54, not too bad. The stock has a 50-day simple moving average of $54.50. Now, what that means to me, just sort of from a philosophical standpoint, is that Oxy's, let's call it the floor on the stock price, has moved to around $55 or thereabouts. So people say, where's Oxy going next? You know, is it going down, back down to $40, $35, etc., or is it going to $70, $80 or whatever? I'm not sure. Nobody knows where the stock is going. But what I can say is that the actual floor of the stock has kind of moved from where it was stuck at around $30 for quite a while to about 55. So that's kind of like the middle. If I take the 50-day simple moving average of $55 or thereabouts, that to me represents sort of the new floor. And from here, we can see some movements in either direction. But now we're talking about a stock that's a $55 stock. We're no longer talking about a stock that's a $35 stock. And that's a difference, right? The PE ratio is a little high at 35. And the price earnings growth ratio, 0.2, the beta 2, you know, kind of as expected, especially for a stock that's had a run on its price very recently. The one-year low of $21, of course, we're far away from that now, and the one-year high of $63, which happened shortly after Warren Buffett bought a fistful of Occidental. The company has a debt-to-equity ratio of 2.79. It's a little bit high, so let's see where that goes this quarter, because I'm sure they've paid off some debt. A quick ratio of 1, which is okay, and a current ratio of 1.23. What's the difference between the two? The quick ratio is effectively cash compared to current liabilities, and the current ratio is cash and cash equivalents compared to current liabilities, and that's why there's change or difference between the two ratios. The current ratio should be 1 or greater, and a current ratio of 1.2 is okay. Institutional investors currently own 72%. You see a lot of activity from activist investors, activists trying to influence the proxy vote for Oxy. I'm going to talk about that more in just a second. But institutional investors and hedge funds own 72% of the stock, and they're not going to vote for any of those activist directives that they're trying to force upon Oxy in terms of green initiatives and things like that. Vicky Hollop purchased almost 14,000 shares, or about 14,000 shares, at an average price of $56.24. So she's down just $1 or so on that buy, but for the long term, this was a good transaction. The total transaction for Vicky was almost $800,000. Insiders only own 0.31 of the company stock. It's not unusual with a very large corporation. We look at Market Beat here. They basically are saying that the earnings estimate for Q1 2022 is only $1.31. I think Occidental beats that one quite easily. Let's go to Zacks. Zacks says the earnings date, May the 10th, current quarter, $1.97. Earnings per share last quarter was $1.48. So effectively, they're forecasting about $1.97, so almost $2 earnings per share. Zacks currently has Oxy at a 1, which is a strong buy, and its industry rank is quite interesting. The top 3% ranked 8 out of 253. Pretty good for Oxy in terms of where the analysts see it right now. How about TipRanks? TipRanks has a analyst target price for Oxy. This is an average of $69.75. I think you know, a good earnings beat can get us back into the $60 range. I'm not sure when we'll see $69.75, but who knows, right? In this market, who knows for sure? I mean, the stocks are going up and down like a bride's nightie, so you just don't know. Anyway, from where we are now, it's about a 20, actually after today, it's about a 25% upside if Oxy gets close to $17. More analysts are covering Oxy all the time now. 17 analysts locally, domestically in the United States are covering Occidental. 9 say buy, 7 say hold, 1 says sell, and the lowest price target, $50. Also staying with TipRanks for a minute, you can see their earnings per share at the bottom of the screen there. Strong outperform 10, you know, that's the highest rating you can get. And you can see Oxy's chart over the last 1 year, over the last year to date, up 84%. So if you're in Oxy, you're probably not feeling too bad about being in Oxy, despite the sort of most recent pullback from about $63 to about $55 where we are today. Here are some of those proxy filings that I was talking about. So you can look them up on Oxy's website if you're interested in doing so. These are pretty much just green activists, you know, the kind of people who in days gone by would have burned books or burned their bras or whatever the case might be. Now they are going guns blazing after anything that's oil and gas. Oxy quite rightfully just files the SEC proxy filing, which is a defense that says just ignore this vote against it. This is stupid. In my mind, this is completely stupid too. It's going to fail, but they'll keep doing it, and they're going to keep doing it every single quarter. They have deep pockets, and the people who fund them want to drive home their green initiatives and green agenda, which is complete garbage. But it's okay. Let them do whatever they do and whatever makes them happy. And as long as they keep failing, I'll be happy. Now, Oxy, according to their website, says that they will be announcing their results on May the 10th, and they will hold a conference call on Wednesday, May the 11th. So it's just a few days away now. And, let's see what happens with Oxy. I'm pretty confident we're going to see a very, very good quarter for Oxy Q1. And, if you suddenly get a spike in the stock and we move from wherever we are in 10 days from now, let's, take today as a guideline and say the stock's trading at $54, $55 a share. If you're long on Oxy and the stock spikes and it goes over 60, don't be shy to take some profit, right? There's no harm ever in taking a little bit of profit off the table. So if you're long Oxy and you have a good performance on Oxy already, which I'm sure you do, unless you just recently bought some, in which case you might be down about 10%. The stock can spike, and we've seen swings of 10, 20% in one day on one stock. So if we see a spike on the upside on Oxy, and you feel it's the right thing to do, take a little bit of profit. Don't let anyone tell you that that's a bad idea, taking profit, right? On the other hand, if it whatever happens in the quarter, if it pulls back some more, you could possibly look to add in to your position if you can buy Oxy at like $50, $51 or thereabouts. But anyway, for now, it's positive, it's optimistic. I think we're going to have a really, really good quarter for Occidental. And despite all this market volatility and this big crash that we had in the past week, you know what? Things are looking on the up. For some of the stocks, it's a great buying opportunity if you wanted to add a little bit more. I'm not going to tell you what to buy. You need to do your due diligence and decide that for yourself. But anyway, for now, this is Mr. Oxy, Mr. Optimistic on Oxy, saying thanks for watching. Goodbye for now. Take care. Talk to you soon.